Hello, students. Today we will discuss the functions of capital markets. Okay, capital markets are financial markets where people buy and sell various assets like stocks, bonds, like that. Okay, so these markets include the stock market where shares of the companies are traded, and also the bond market where the debt securities are exchanged. Okay, so the capital markets provide a platform for the business, for the government, and for the individuals to raise the capital, to manage the risk, and to invest for the future. Okay, so you should know how does the capital market work. Okay, so in capital market, the primary mechanism through which funds are raised is the issuance of financial instruments by the companies seeking capital. Okay, so this issuance typically occurs in the primary market. We have two types of market, primary market and secondary market. Okay, so you should know what is primary and what is secondary when what comes into the picture. Okay, so in a capital market, the primary mechanism through which funds are raised is the issuance of financial instruments by the companies seeking capital. Okay, so this issuance typically occurs in the primary market where securities like stocks or bonds are introduced to the public for the very first time. Okay, I short that is IPO. Okay, initial public offering. Initial public offering, shortly called as IPO. It is a very common method allowing the companies to go to the public and raise capital by selling shares to investors. Alternatively, we have debt instruments also like bonds that represent a way for the companies to borrow money from investors with the promise of paying the periodic interest and also the promise of returning the principal amount at the time of maturity. So once these financial instruments are issued, then they enter the secondary market. So here, investors trade them among themselves without the involvement of the issuing company. Okay, the secondary market is where the familiar range of stock exchanges comes into the play. As investors buy the securities and sell the securities and on the platform, like all of you know, National Stock Exchange, shortly called as NSE, or Bombay Stock Exchange, shortly called as BSE. Okay, so the we should know how the prices of these securities are determined. Correct. So the prices of the securities are determined by the interplay of supply and demand. If more investors want to buy the security, I mean, the demand is more than the supply, then obviously the price tends to rise. Okay, but if more investors want to sell, not the buying part, okay, so then the price tends to fall. So this dynamic pricing mechanism reflects not only the investor sentiment but also the perceived value and performance of the underlying assets or the entities. Okay, so we have intermediaries like brokers, we have investment bankers and other financial institutions. They facilitate the smooth functioning of capital market. Okay, so they help us, they connect the buyers and sellers. They provide research and analysis. They assist in the issuance of securities. They assist in the trading of securities. And we have regulatory body, SEBI, SEBI, Securities and Exchange Board of India. So they also do oversee and they enforce the rules to maintain very fair, very transparent, very orderly markets. Okay. And next we will discuss the functions of capital market. The first one is links borrowers and investors. So this is one of the primary function of capital market. They will be acting as a link, the intermediary, connecting the company who is in need of funds and with those looking to invest, that is investors. Okay, so borrowers means who wants cash, like companies or yeah, so they want to raise the capital by issuing the securities, and the investors they are looking to invest. They will deploy their funds in the securities. Okay, and the next one is capital formation. Okay, capital market play a very vital role in the capital formation by enabling the companies and other entities to raise funds for various purposes. We have mechanisms like IPO, we have initial public offering, or we have bond issuance. So the business can access the necessary capital to fuel expansion, or sometimes for research and development, or for any other strategic initiatives. Okay, and the next one is third point is regulate security prices. Okay, so capital markets contribute to price regulation by allowing the securities to be traded properly, to be traded openly. Okay, so the forces of supply and demand influenced by factors like market sentiments or any economic conditions or financial performance that determine the prices of securities. So this price discovery mechanism ensures that securities are valued in a very transparent manner, in a market driven manner. Okay. And the fourth point is provide opportunities to investors. Capital markets offer a very diverse range of investment opportunities to individuals and institutional investors, whether through stocks or bonds or other financial instruments. Investors can tailor their portfolios to align with their risk tolerance or with their align with their objective of investment at the time horizon. Okay, and the next point is minimizes transaction cost and time. Okay, so capital markets enhance the efficiency by minimizing the transaction cost and reducing the time required for buying and selling securities. We have electronic trading platforms and streamline the process contribute to a more cost effective and timely execution of transactions benefiting both the investors and the issuers. Okay, the next one is capital liquidity. Okay, so the last point is capital liquidity. So liquidity is very important aspect of capital market. Okay, it is very liquidity is very critical aspect of capital market by providing a platform for continuous trading. Capital markets ensure that the investors can convert their investments into cash relatively in a easy manner. Okay, so this feature of liquidity enhance the market efficiency and allows the investors also to react promptly to changing market conditions. Okay, thank you for listening.